Welcome back to the Malaysia Money Matters show. It's February 25th, 2025, and we've got a lot to cover today.
Yeah, always something new happening in the financial world.
That's for sure. Well, let's jump right in and start with some company news here in Malaysia. What do you think?
Sounds good to me.
All right, 99 Speed Mart, the convenience store everybody knows, saw their profits jump almost 17% last quarter.
Wow, that's huge. 17%.
Yeah, they're opening new stores like Crazy 81 just last quarter, and they're moving into Sarawak too.
Interesting. So with that kind of growth, I wonder about the impact on smaller shops, the ones in those neighborhoods.
Yeah, that's a good point. What happens to them with 99 Speed Mart aiming for 3,000 outlets by the end of the year?
It's definitely a trend to watch, especially with them moving into online bulk sales, too.
Okay, let's move on to CTOS Digital. The credit reporting agency, their profits dipped a bit because a tax exemption ended, but revenue still climbed 5%.
Hmm. So even with the tax change, their main business is doing well. That's interesting.
Yeah, they're really focused on giving businesses and consumers better credit tools,
Hmm.
which is important with 16 million credit-active consumers here.
Right. Having good credit information is so important for getting loans or making big purchases.
Definitely. Okay, next up is Malakoff, the power company.
Mm.
They had some issues with plant outages, but turned things around.
How'd they manage that?
Their Tanjung Bin plants performed well, and their waste management arm, Alum Flora, helped too.
So diversifying into waste management gave them some stability, even with the energy market ups and downs.
And they're planning capacity expansion too, so they can be a big part of meeting Malaysia's energy needs in the future.
Makes sense.
Now, MISC, the shipping company, their share price has been a bit up and down lately, but analysts are actually upgrading the stock.
Really? Why is that?
They're betting on MISC's strong position in offshore, and petroleum operations could be a good buying opportunity.
I see. And their dividend yield is attractive too. So investors could get a decent return even if the share price stays volatile.
Yeah, it's about looking at the long term. Now let's look at Bintulu Port over in East Malaysia. They hit record revenue, but profits dipped because of rising costs.
Like what kind of costs?
Things like staff expenses and depreciation. They're expecting growth from handling methanol, but also watching global trade tensions.
So even with great revenue managing costs is key for profitability, and global events can have a real impact.
Exactly. Even a port in Sarawak can be affected by what's happening on the other side of the world.
That's globalization for you.
Before we move on to the international news, let's quickly touch on a few other Malaysian companies. Enterprise Plantations is doing well thanks to higher palm oil prices.
Palm oil is such a global commodity, any changes in supply or demand can have a big effect on companies like them.
And Cohen Food, known for their frozen food, is seeing more demand in Europe and North America.
Interesting.
But on the flip side, Lei Hong, the egg producer, had a profit dip, but expects a rebound this coming year.
Okay, and what about Supermax, the glove maker?
They reported a smaller loss, thanks to recovering demand and cost cutting, but they warned about a potential slowdown in orders in 2025.
It's a mixed bag for sure. Some companies are riding global trends while others face headwinds.
It really shows how important it is to be diverse, both in products and markets, to handle all this uncertainty.
Absolutely. Now, what about that international news you mentioned?
All right, let's zoom out and look at some big international news that could impact Malaysia. Apple is investing a whopping $500 billion in the U.S. over the next 4 years.
Wow, 500 billion. That's massive. What are they doing with all that money?
They're building a new factory for AI servers in Texas and adding 20,000 R&D jobs.
This could be a response to those U.S. tariffs on Chinese products.
It could be a sign that Apple is diversifying its manufacturing too. But it raises the question, could this shift create opportunities for Malaysian companies?
Yeah, if Apple is looking to rely less on China, Malaysia could benefit. We have skilled workers and a history of electronics manufacturing, but the competition will be fierce.
Now, across the world in Germany, business leaders are urging their new government to deal with high costs and bureaucracy.
What are they concerned about?
They're worried about Germany's economic slowdown and potential deindustrialization.
Germany is a huge economic force, so their worries are a big deal.
If companies start investing elsewhere, it could have a ripple effect across Europe and beyond. And since Europe is one of Malaysia's main trading partners, any slowdown there could impact us too.
Right, makes sense.
Okay, shifting focus to China, they're doubling down on their own grain production.
As the world's biggest food importer, that seems like a big move.
They're aiming to become self-sufficient, especially with all of these trade tensions bubbling up.
So they're trying to be less reliant on imports and protect themselves from any disruptions in the global food supply chain.
It's a smart strategy, considering how unpredictable things are right now. You know those U.S.-China trade tensions we talk about?
Yes.
Well, they're having an impact worldwide. Vietnam just slapped anti-dumping tariffs on Chinese steel imports to protect their own industry.
It's classic protectionism countries trying to shield their industries from what they see as unfair competition.
And with Malaysia being so reliant on trade, these protectionist moves could have consequences for us as well.
It's a complex situation for sure.
Absolutely. In fact, our Minister of Investment, Trade and Industry is heading to the U.S. for a trade mission to address these very concerns.
It'll be interesting to see how that goes.
Now, before we wrap up this part of our deep dive, let's turn our attention back to the palm oil market.
Okay, what's happening there?
Experts are predicting a potential drop in CPO futures prices later this year because of lower export demand and increased supplies of soybean oil. But those U.S. policies with tariffs on certain vegetable oils could cause some volatility.
The palm oil market is always reacting to global events. It's like a roller coaster ride.
And since Malaysia is a major palm oil producer, these price swings can really affect our economy. It's definitely a sector to keep a close eye on.
Agreed. So what's next?
Well, let's move on to part 2 of our deep dive and continue exploring the financial news that matters most to you here in Malaysia.
It's really amazing how one small thing can cause changes across the world.
And it shows how connected everything is. Speaking of connections, remember that talk about Malaysia becoming a leader in AI in ASEAN.
Oh, yeah. What about that?
It's gaining some traction. The Dewan Rakyat speaker is pushing for AI initiatives and training programs for government officials.
That's pretty big. It sounds like they're seeing the potential for AI to change a lot of things, like healthcare, education, even public services.
Yeah, imagine if AI could make the government run more smoothly. It's exciting to think about the possibilities. But while Malaysia is getting ready for the future, Singapore is dealing with their present. Their core inflation rate just hit a 3-year low.
That's interesting. Could that mean they'll ease up on monetary policy?
It's possible.
Yeah.
If their central bank lowers interest rates to stimulate the economy, it could spill over into Malaysia.
How so?
It might make Singaporean goods and services more competitive, which could be good for Malaysian businesses and consumers who import from Singapore.
Right, that makes sense.
Now for some more company news. Sun Surya, the property developer, saw their profits jump 5 times higher than last year.
5 times? That's a huge increase.
Their property development business is doing great, and their healthcare and education divisions are performing well too.
Sansuria seems to be in the right sectors. Property, healthcare, and education are likely to stay strong in the coming years.
Yeah, their success could be a sign of what's to come for other companies in those areas. Now, for a story that might make you reconsider your investments, Supermax, the glove maker, reported a smaller loss this quarter.
That sounds like good news, right?
It is on the surface,
Oh.
but they're also warning about a potential slowdown in orders for 2025.
Oh, so what's the problem?
Well, they're benefiting from recovering demand and cost cutting, but they're facing headwinds from U.S. customers who stocked up on gloves before those tariffs on Chinese imports. Plus, Chinese manufacturers are getting more competitive, which puts pressure on prices.
It's a tough situation for them. They'll have to innovate and find ways to stay ahead if they want to keep their market share.
Absolutely. Now, on a brighter note, UOA Development, another property company, finished the year with their highest profit in 4 years.
What's driving their success?
Their ongoing projects, especially in the popular Bangsar South area, seem to be the key.
It's all about location, as they say. And it looks like UOA Development is in the right spot.
Speaking of being in the right spot, Public Mutual just dominated the LSEG Lipper Fund Awards. They won a massive 28 individual awards and 2 group awards.
Wow, that's quite an achievement.
It shows they're consistently performing well and managing funds across different asset classes. It's a good sign for investors looking for a reliable option.
I see. And Lipper also released a new expense rating this year, which tracks the total expense ratio, or TE, of unit trust funds. That's useful information for investors who want to understand the costs involved.
Definitely.
Yeah.
Now, shifting gears to RCE Capital, a consumer finance company, their profits dropped last quarter.
Why the dip?
They've become more cautious about lending, which might mean slower growth in the short term, but it could lead to a more stable business in the long run.
So they're prioritizing quality over quantity. Makes sense in this economic climate.
Okay, let's zoom back out to the international scene. Those trade tensions between the U.S. and China are still simmering, and the effects are being felt globally.
It's making countries rethink their strategies and creating uncertainty for businesses. It's hard to plan for the future when things are so unpredictable.
And that uncertainty can really hurt investment and economic growth. But in the midst of it all, countries are trying to adapt. like Vietnam imposing anti-dumping tariffs on steel imports from China.
They're trying to protect their domestic steel industry from being flooded with cheaper Chinese steel. We're seeing similar moves in other countries, too, from South Korea to Brazil.
It's a sign of the times. But as we talked about earlier, these protectionist policies might help in the short term, but could ultimately hurt global trade and economic growth in the long run.
It's a delicate balancing act trying to protect industries while also keeping markets open and maintaining international cooperation.
Exactly. Speaking of balancing acts, Malaysia's Minister of Investment, Trade and Industry is heading to the U.S. for a trade mission.
Oh, right. I read about that. What's the goal?
He wants to address those concerns about potential trade disruptions and reassure everyone about the strong U.S.-Malaysia trade relationship.
That's important. With trade tensions rising, it's crucial for Malaysia to have good relationships with key trading partners like the U.S.
Definitely. Now, before we move on, let's take a moment to acknowledge the situation in Ukraine.
Yes, of course.
It's been 3 years since the Russian invasion, and the conflict is still impacting the global economy.
It's a sad reminder of the human cost of war and how fragile peace can be.
It's also affecting energy prices, supply chains, and investor confidence. The longer it goes on, the worse the impact will be.
It really shows how important geopolitical stability is for economic prosperity.
And in our interconnected world, events happening far away can still have a big impact on us.
It's true. So what's next?
Let's move on to part 3 of our deep dive and wrap things up by discussing some key takeaways from today's news. We covered a lot of ground today, from company earnings to trade wars. What really stood out to you?
I think it's just amazing how much is happening at once. Companies are innovating, governments are dealing with global challenges, investors are trying to figure out what to do. It's all connected.
You're right. We saw how things in one part of the world, like the war in Ukraine or those U.S. tariffs, can have a big impact on markets and industries everywhere, even for businesses and people here in Malaysia.
Yeah, it shows how important it is to stay informed and be able to adapt. We can't control everything that happens in the world, but we can make good decisions based on what we know.
That's exactly what the Malaysia Money Matters show is all about. We're here to break down those complicated financial stories and help you understand what it all means for you.
So whether you're an experienced investor or just starting out, stick with us. We'll keep diving into the things that matter most to you.
You know, another thing that really hit me today was seeing some companies doing really well in all this uncertainty while others are struggling.
Oh, yeah, like 99 Speed Mart expanding so quickly and then Supermax having to prepare for a slowdown. It's quite a contrast.
It just shows how important it is to be diverse in your products and the markets you're in.
Right. The companies that can adapt to what consumers want and navigate all the global changes will be the ones that succeed in the long run.
And we can't forget about technology either, especially AI. It seems like the Dewan Rakyat speaker is really pushing for AI in Malaysia.
That could be a big change. Imagine AI making government work better, improving healthcare, changing how we live and work.
It's definitely an exciting time to be in Malaysia with all this new technology coming in.
Yeah.
So to sum it all up, it's clear that things are changing fast all over the world.
That's for sure.
But if we stay informed, stay flexible, and make smart choices, we can handle those challenges and take advantage of the opportunities that come along.
Well said. I totally agree. Thanks for joining us on this deep dive into the financial world. I hope it was interesting and helpful.
And don't forget to subscribe to the Malaysia Money Matters podcast for more in-depth analysis and discussions on all the things happening in Malaysia's financial world. Until next time, stay curious, stay informed, and stay invested in your financial future. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.